Hi everyone, my name is Jeff Wu, the brand, social, and customer comms lead at Maersk. I'm delighted today to host the customer broadcast on behalf of Maersk, along with today's guest speaker, Marco Xu, the airfreight manager of Greater China area, and Ken Lim, our senior market manager of Northeast Asia. I'd like to say a big welcome to you all who have taken time to attend this broadcast, both those who have joined us before and those who are new today. Today's broadcast will cover two primary topics. The first thing being an overview of the air freight service by Marco and an overview of the ocean freight service by Ken. Given our current climate and challenges, I hope you will find this information shared today to be very, very useful. Before we begin, I'd like to inform you all about Zoom's interpretation functions, which enables you to have Chinese audio track. To enable this function, please click on the interpretation icon on Zoom's toolbar. During the broadcast, we will host a quiz related to the content shared by our speakers today. Simply complete the quiz questions that appear on your screen to participate in the lucky draw. Besides, there will also be a post-session survey, so stick around for that and win yourself some delicious butter cookies. Okay, let's get started. I'd like to welcome Ken to the floor now. Ken, over to you.
Good afternoon, everyone, and welcome to the December edition of our Asia Pacific customer broadcast. My name is Ken Lim, and I am the Senior Market Manager for Northeast Asia, responsible for the ocean product from Japan and Korea. For the first half of my presentation, I would like to give you a general update on macroeconomic conditions, as well as our focus on Northeast Asia. Global economic growth continues to face headwinds, driven by high energy prices and historic inflation levels in key markets. This in turn is presenting challenging market conditions for many of our customers as demand falls short of expectations. Overall, container trade is expected to decline between 2 to 4% in 2022 versus last year. And much uncertainty remains as we approach 2023. Whilst the overall situation is contracting, it is important to highlight that differences in trade growth are being seen across the various markets. Some north-south trades, for example, tend to be weathering the adverse conditions a little better, with year-on-year trade remaining positive in areas such as Oceania, imports into Latin America and West Central Asia, as well as exports out of Africa. Now on to Northeast Asia and the impact of the Korea strikes and Japan feeder network. The recent industrial action in South Korea being taken by the Truckers Union continues to have a lingering effect on landside activities. Whilst port operations have not been directly impacted, the disruption on land transport has resulted in a backlog of orders that need to be fulfilled. We understand the impact this is having on businesses and the frustration it causes. Hence, we continue to closely monitor our vessel operations and will endeavour to make adjustments to berthing lineups and cut-off dates to accommodate your requirements as best possible. Moreover, we are mindful of a potential surge in volumes after the strike activity and will be factoring this into capacity decisions to ensure any backlog is cleared as swiftly as possible. So sit tight. Our focus on network design includes comprehensive coverage of our ports, and we do so through a number of ways, including third-party feeders, utilizing the services of our sister company Sealand, and in case of Japan, deploying our own service. Here, our Sakura service includes coverage of Nagoya, Kobe, as well as a double Yokohama call. Furthermore, owing to strong demand, the capacity on this service was recently upgraded to ensure customers can continue to enjoy coverage in and out of key Japanese ports without disruption. I will now pass on to Marco for an update on our air freight service. Thank you.
Thanks, Ken. Hi, everyone. Thanks for joining us today. As mentioned, my name is Marco Xu, and I'm the air freight manager for the Great China area. The first part of my talk today will be covering the current space availability and the rate trends, as well as the evolution of jet fuel. Since our last update, things have been complex in the air freight market. We still face many challenges due to COVID-19 situation in China and the conflict in Europe. Those impacts are being felt across all the industries. Over the past few months, outbound tonnage were down significantly from Asia Pacific and Europe, both -5%, and we saw a slight decline in ex-North America, -1%. Meanwhile, increases were recorded from other regions, most notably ex-Central and South America, +7%. On a line-by-line basis, strong decrease were shown between Asia Pacific and Europe, -6% westbound and -8% eastbound, and between Asia Pacific and North America, -5% westbound and -8% eastbound. A complex mix of reasons such as inflations, other geopolitical and economic factors all contributed towards Asia Pacific volume reductions. Tonnage have been stabilized in the past weeks of October and November after dropping sharply in early October. However, a significant Q4 peak is yet to arrive. In China, we still see impact of COVID-19 across. Almost 1 month ago, the National Health Commission of China issued a policy package aiming at optimizing the prevention and the control measures of COVID-19. The 20 measures feature several new rules that are perceived as the most significant easing step today, including the ending of circuit breaking mechanism for international passenger flight, shortened centralized quarantine days for cross-border travelers, and the cancellation of identifying secondary contacts. We are also seeing China-based airlines start to add on international passenger flights. Although it is still less than pre-COVID level, belly hold capacity has yet to recover. In positive news, there has been an increase in capacity from Hong Kong to Europe and North America. In addition, there has been an adjustment in Hong Kong aviation fuel costs from 3.8 Hong Kong dollar per kilogram in November to 4.3 Hong Kong dollars per kilograms in December. In Australia and New Zealand, there has been reduction in freight costs on key corridors linking Southeast Asia and South Asia. Capacity constraints have eased on service to Vietnam, leading to some low freighter price. For Vietnam, air cargo volumes have remained flat, and unfortunately, we do not see any signs of Q4 air peak this year. 2 weeks ago, the height of shopping season began with a bang, starting with Black Friday and Cyber Monday. This shopping period will run through to Christmas Eve, but uncertainty clouded the holiday outlook in terms of how much consumers will spend. Some forecasts indicate it will be a positive, but more muted. The most that can be said is that the progressive weakening trend of our recent weeks and months has flattened out in terms of tonnage, and the average rate will see a further slight decline. Now onto the topic of jet fuel evolution. The world is truly in a global energy crisis, and across the globe, we are seeing margin squeeze and the price rise. Rising imports of LNG to Europe amid the Ukrainian conflict and a potential rebound in Chinese appetite for the fuel will continue to tighten the market. In October, APAC agreed speed oil production cut 2 million barrels per day of output, the equivalent of 2% of global supply, curbing supply in an already tightened market. Jet fuel rates continue to be at a historically high level and highly volatile. Current November average is at $3 per kilogram, and the jet fuel price continued to be uncharacteristically of synchronization with crude oil trend. Thank you, and let me pass back to Jeff for hosting our exciting quiz. And don't walk away, we have got more updates for you soon after the quiz.
Thank you both for sharing those valuable insights. I'm sure we can all agree that the past 3 years has caused significant disruption to our ocean and freight services. And together we face some tough challenges as well. That concludes the first half of our sessions, which means it is time for our halftime quiz. This quiz will cover some of the points you have just heard during Marco's presentation. You should all be able to see this pop-up screen on your window right now. If you cannot see it, you can manually open Zoom's poll function on the toolbar. We'll leave this pop-up window for a few minutes to give you some time to complete the quiz. I'd also like to remind you that we'll be running a post-event survey, which provides you with another opportunity to win our gift. All winners of both the quiz and the survey will be notified after the event. Now that everyone has hopefully gotten their answers in, I'd like to pass back to Marco, who will be providing an outlook update for 2023. Marco, over to you.
Thank you. For the second part of my presentation today, I will be providing a much anticipated outlook for year 2023 and discuss Maersk Air Cargo taking flight. As we know, air freighters tend to be one of the more reliable source of transport. Boeing points out in recent market forecasts that following COVID, companies are likely to rely on freighters to help mitigate the risk of disruption to supply chains. In the global transportation network, air freighters will continue to be a critical enabler to move high-value goods and increase the volume across expanding market. The world freighter fleet is expected to double in size over the next 20 years on the back of average annual cargo traffic growth of 4.1%, according to the latest Boeing World Air Cargo forecast. Maersk Air Freighter is expanding our fleet of aircraft to meet our customer need for more reliable and agile logistics. It allowed us to swiftly transport time-sensitive, high-value cargo to destination and fly past any supply chain disruption that may arise from congested port, labor shortage, and strapped capacity. Maersk Air Cargo is progressively deploying and operating a control capacity of 6 aircraft, 3 new and 3 leased Boeing 767 cargo aircraft. 1 new freighter have been starting from Korea to United States and will expand to China around early Q1 2023 with more aircraft. Routings will be Hangzhou, Incheon, Rockford, and Shenyang, Incheon, Greenville round trip for the Trans-Pacific lanes, and Hangzhou, Zhengzhou to Berlin between China and Europe. For business looking for a reliable solution during this turbulent period, take advantage and partner with Maersk Air Freighter as a standalone service, or easily combine it with our ocean and inland transport models, warehousing and CHP service. It can power your supply chain in more ways than one. We believe that having our own control aircraft capacity is an essential requirement in the air freighter business and a key decision parameter for our customers when they are looking for supply chain partners. Last but not least, I like to say air freighter is a cyclical industry, and we have faced a lot together in the past. And if we continue to work together, we can make it through stronger and more resilient than before. What goes up eventually comes back down. When it comes to outlook for year 2023, this is the case as strong demand and a higher rate begin to ease after 2 years of unprecedented growth. Looking ahead, we expect more challenges and uncertainties for the air cargo market over the next 6 months. High inflations, elevated energy costs, increased interest rate, and a lack of labor is the forecast for year 2023. It's going to get harder before it gets easy. Even the supply chain pressure easing globally, the current economic condition expect to push freight rate slightly down. It is highly unlikely the rate will return to year 2019 level directly next year. China export rates are expected to align to a new normal due to the impact of COVID-19 and expectation from commercial airlines. The logistics industry will need to navigate a path, and air cargo will face a bumpy ride. I'd like to pass back to Ken. Thank you, Ken.
Thank you, Marco. Now on to the 2023 outlook for the ocean service and how Maersk is working to support businesses through this challenging time. Maersk remains committed as ever in ensuring we maintain a sustainable network that caters to our customers' needs. Given the challenging outlook and uncertain demand facing the market going into 2023, we are constantly reviewing our network to remain agile. This ensures we are adaptable and can continue to add value to the supply chains of our customers, as we have consistently done despite the market volatility in recent times. We are doubling down on ensuring we have a dependable transported by Maersk network that is best in class. In this connection, we acknowledge that there have been numerous service changes on our Pacific network in recent times. A culmination of long waiting times at ports, berthing restrictions, and volatile demand have resulted in various adjustments to the network. The TP1 and TP9 services have been merged, for example, in an effort to overcome berthing congestion and restrictions at the Port of Vancouver. Furthermore, the impact of service suspensions, such as the TP7, have been mitigated as additional calls were added to alternative services, such as Seattle on the TPX, in order to maintain port coverage. Similar efforts were made on other strings, such as TP2 and TP3 coming together, as well as the combination of TP20 and TP28 services to alleviate against fluctuating demand and provide a more stable and consistent service offering. Decisions around these changes have not been taken lightly and ultimately have been carried out to ensure we mitigate against any further disruption to your supply chains. It is also prudent for us to be agile, given the impeding regulatory changes being implemented by various governing organizations moving into 2023. Firstly, there is the Emissions Trading Scheme, also known as the ETS, being applied to shipments moving in and out of European Union. This initiative results in additional costs that are being incurred by carriers, which we simply need to pass on in order to maintain a reliable network. Maersk do acknowledge that the increased costs are coming at a difficult time, and we are doing our utmost to ensure customers are presented with alternative measures. More to come on this later. In addition to the ETS, the International Maritime Organization has announced a series of regulatory changes in an effort to reduce the carbon footprint of ocean transportation. Several indices, namely the Energy Efficiency Existing Ship Index, EEXI, and Carbon Intensity Indicator, CII, will be introduced in 2023, which carriers will need to comply to. Naturally, this will mean that some vessels in the industry will not meet these new standards being imposed by the EEXI and CII indexes, and hence network adjustments can be expected as a result of this change. Maersk continues to review how exactly this will impact our network, but as usual, any network decisions are made with the needs of our long-term customers at the forefront of our decision making. Our eco-delivery product remains a popular value-added service that can assist with your carbon emissions targets and aspirations. As mentioned earlier, Maersk are reviewing ways in which we can assist with the increased costs in relation to the ETS, and in this connection, have put in place an ETS surcharge exemption for any customers that subscribe to the eco-delivery product in or out of the EU area. We believe this not only helps to mitigate the costs, but further supports your business through providing real carbon savings in a consumer environment that is increasingly focused on carbon reductions and eco-friendly businesses and their supply chains. In addition to this, we also have an emissions dashboard product, another service that is able to give you more visibility and control over your carbon footprint. The data in this tool is not only confined to your ocean freight, but extends beyond this and measures the actual or potential emissions across other modes of transportation, such as air, truck, and rail. This in turn empowers you to make informed decisions when deciding on the modal transportation that is most fit for purpose for your business. Please do reach out to your respective account owners in case you would like to find out more about these options. So that wraps up my presentation for today. Thank you very much for tuning into this session, and I hope you are all able to take away something valuable. Thank you.
Thank you very much, Ken. I hope that everyone was able to take some notes during the presentation, as I'm sure that the information will be very helpful. We have now reached the end of the broadcast. If you'd like to participate into the lucky draw, we've just posted the link on the screen to collect your feedback. We would love to hear how you think on what we have shared today and how we can make it better. The winners for the lucky draw will be notified by emails after events. Thank you so much for joining us today. It has been a pleasure to have you with us today, and looking forward to seeing you soon in a future broadcast. Also, thank you to our speakers for sharing their knowledge today. And thank you all, and look forward to seeing you soon. Bye-bye.